All right, traders, we had a big move to the downside, real scary move. Everybody's talking about the big bear market, and we're ready to rock and roll to the downside and start selling everything, right? Well, not really. We're going to talk about that in a minute, but we did have a nasty sell-off on Friday. We were down about 38 handles on the trade war talks that are escalating. Another 100 billion Trump is actually talking about. Hasn't done it, but is kind of talking his game. And markets didn't like that. And then we ended up down about 70 handles in the ES. That's a very large move to the downside. So opened down about 40, down another 30 for the day. I mean, that's kind of crazy. So if you didn't come in short, you were looking to do one or two things, right? You're looking to at least try to buy the dip, and that didn't happen, right? There really wasn't a dip buy to buy. There wasn't anything out there. I mean, we just kept on literally just selling off pretty much all day. We did get one little bounce in the morning, and that was really it. But then again, right, down 38 handles in the overnight session, got to be very careful because of the fact that there was a lot of volume in the overnight. So a lot of the sellers exhausted themselves, right? So we did get a little bit of a push, but then new money came in and started selling the market. So a lot of algorithm trading. So we'll see what happens going into Monday. Now, I'm sending this report out Sunday so you guys can peruse it at your leisure and really dissect the video and put your levels on and be prepared for next week, the week coming, actually. So I still think, okay, based on my technical view, I still believe that we're going to get one more push up, but that push will be sold into, and then we start a full-blown correction, if not a market crash. I'm still in the camp that we are going to get a crash, absolutely. Obviously, the timing will be the factor, but I want to show you in the chart, and I've shown this to you before. This is my money flow chart that I use, and this is telling me, right, we're below the moving average, the 20 to 50 to 200, 20 to 50, and the 200 is down here, so we're not below that. I do apologize, but we are very close to breaking down here, okay? This is the line in the sand, if you will. If we lose that 200, we'll definitely test that February low. Now, what we see here is a lot of distribution days. You can see that we have this, the 50-day moving average, okay, based on volume, and look what we have, big, massive distribution days. And when we were up, we had very little. You remember that day we were up during the week? I said, I don't, that does not look like a full-blown buying, stepping in. All that was short covering, and sure enough it was, right? So nobody was out there to look and defend it. We have accumulation distribution below average. As you can see, money's coming out. When we're above the 50-day moving average, money is staying into the market, or at least rotating in different asset classes, but this is not to happen here. And here's the most important, chalk and money flow, big red. Money flow index, red. Okay, that is not a good sign. Money is absolutely flowing out of the market. And remember, when you have a full-blown correction or a crash, money is not going to be rotating into different asset classes. Money will definitely go into bonds and gold, and some consumer discretionary, but most of it will come out of the market and be parked somewhere else. And that is where you get illiquid market, and that's when you get the big push lower like we did here. And I mentioned many times in our research video that we have passive investing. If you remember that 3-4 weeks ago, we had 34 billion come in, and that was right up in here somewhere. And then we had the next day, the next week, we had about 15 billion come back out. So that marked the top, sure enough. And I do think the top is in, but I need to get more evidence. Okay, when we do have that last push up, we do have some gap areas here, like we talked about, and I showed them to you in the charts. But we need to pay attention to that. Now, interesting developments in the commitment and trader reports. Okay, now I always show you gold and crude oil. I do look at the NQ, the ES, obviously, in our report. But I don't show them to you as much because a lot of it didn't change. But this is really interesting. Take a look at the ES. This is obviously the E-mini. Look at how the producers are short. Unbelievable. I haven't seen something like this in a long time. Now, this is last week, and this is last week, and that was the week before. And I thought that was kind of maybe a skewed number. So I really wanted to see this past Tuesday or Friday. Look at the size of that candle. That is the smart money in the report. This is the ES. Okay, now here's what's really weird. Okay, here's what's really odd, if you will. Here's the NQ. Okay, the NQ has the speculators, right? The specs, the large specs, right up in here, short, the most short, and I went back since 2011. So the speculators are the dumb money. They're short the NQ when the producers are long the NQ. And then you have the producers short the ES and the specs long the ES. So this is very conflicting, all right? We have the ES producers short. We have the NQ producers long. And that's the smart money, okay? The commercials, they're the smart money. So it's going to be very interesting to see what the development is going to occur this week. Now, I do think going into options expiration, you do have a strong bias. Now, we also had that horrific chemical attack in Syria over the weekend. I don't know how that's going to handle with the market. All right, obviously it's Sunday, and the futures aren't open yet. It's still in the morning. So we're going to have to pay attention. There's a lot of variables that are going to happen this week. I still think that the markets, and again, this is nothing that I want you to start putting longs out there. If you get a long signal, you trade it, right? The intraday charts are very overextended. But the daily charts are not. They're not that extended. They're not oversold. But I want you to pay attention to all of the information that I'm giving you. You have to be on your toes, because at any given moment, you have the producers long NQ, right? And then you have the producers short ES. It's just kind of weird. I never really saw that. They're usually pretty hum along the same way, you know. But nonetheless, this is very interesting developments at a market area where a market would top. The ES, they're short. So this is interesting developments. All right, so let's get right to the charts. And here's another thing, the reason that I'm a little skeptical that we're not really done going up. And please, I'm not saying that we're going to make new highs, not even close. I think the market has topped, but I think we're not yet we're not ready to crash just yet. Look at the VX, the VXX. You could see that that VXX didn't explode higher. We're down 70 handles, and the VXX did not explode higher. That's interesting, right? So it tells me that the VXX, well, maybe they don't believe that the market is ready to go down or crash. It's just something that I wanted to show you in our video here. So just keep an eye on this VXX. But remember, when we do explode, this will explode higher, and these are my two targets, 62 and 71.96. All right, so let's take a look at the ES now, since we're talking about the ES. Symmetrical triangle, we broke down, we came right back up. We broke out on Thursday, right? But it wasn't a big breakout. There were just basically small little spinning tops, dojis, and look what happened. We took the low out, and now we're back below the symmetrical triangle. But remember, we got 3-4 little gap areas here that need to get filled. So I'm going to pay attention to that. Now, remember, guys, we are overextended. We're not oversold quite as of yet, but look at the volume bar. We have a distribution day on Friday, no question. And then we had 3 days up, but look at the volume, how it just diminished. Each day was lower and lower and lower. Okay, not a good sign. Definitely not a good sign for the equity markets. And I do think that the bigger risk is to the downside, but I think they're going to probe them a little bit. I think they're going to try to get these guys to get everybody long again so they can push this market higher. There's a lot of market participants and institutions that are still long in the tooth. That's in their best interest. Now, you take a look at the volume profiles. Okay, look at this right up in here. If I just draw a line going across, and so you guys can see this a little better. Look at where we are. All of these guys are caught long, right? They're all long here, and they're long here, and long here. So you got here, you got 3 areas, big areas here where they're long. They didn't get a chance to get out yet. So remember, it's all about psychology of the markets and sentiment. Now, the sentiment has absolutely changed. There's not a question about it. You know, people are more eager to sell, but you still got a lot of longs up in here, and not just the retail crowd, right? Not just the retail. It's a lot of institutions, a lot of hedgies that are still trapped long, thinking this market was going to go higher. So it's in their best interest to buoy the market and start to rally. I don't know when that's going to happen. It's going to happen on Monday. I have no idea, but I am ready for the market to either go higher, and if it doesn't, well, I'm going to short any rallies, and that's what a professional does. You have to be ready, and you have to react to what the market is giving you. So just make sure. But anyway, here are your areas. Okay, watch out for the 26.94.5, and then look for the 27.50 area. Okay, that's the 2 big ones off the daily chart for now. Okay, NQ. Well, NQ held in a lot better than ES, and you could see clearly why, right? If the producers are long NQ and the large specs are short NQ, well, obviously they're going to look to. There's a reason for it, and they're holding up pretty well. But I think a test of the 200 at 63.43, 65 is probably inevitable. The high will be Friday's candle high, 66.0450. All right, and you can see big distribution bars on the downside, and look how low our volume are on the to the upside. Okay, so just pay attention to that. Transports. Here's another thing. Transports really, they sold off, but they held the 200. This is going to be a really big omen here. If we lose the transports to the 200-day moving average and we get 2 daily closes below that and we start to separate, look for these areas here to come in as support. But more importantly, the market should start to break down hard. Okay.